2021 was all about growth at any cost. However, from 2022 to 2025, it was about survival. What do you think 2026 will be remembered for in FinTech?
FinTechs will not be considered as outsiders. They will become core institutions of the ecosystem.
Every bank is a tech firm. Every FinTech will become a financial institution.
You can scale up technology, you can scale up human resources, but you cannot scale the trust.
Start from the outcome and work backwards. Now that solution can be AI enabled, it can be Gen AI enabled, it can be ML enabled, it could be a simple, if you cannot answer why a customer should work with you, why a financial institution should work with you, or why you should exist in a single line, you will find it very hard to survive.
Thank you all for listening to today's podcast. I'm joined today with our esteemed guest, Vugar, CEO of Unicapital, and Laksh Gangwani, Chief Growth Officer. And we're doing this out of Baku. I'd like to get going and start with Vugar first of all. Let's start with context. 2021 was all about growth at any cost. However, from 2022 to 2025, it was about survival. What do you think 2026 will be remembered for in FinTech?
We start surviving when we focused on growth, and now we shall focus, I believe we shall focus on building. So foundations is ready, it's in place. So we need to make things happen. So I do believe for the next year, the FinTechs will not be considered as the business outsiders or someone who makes the business outside the conventional model. They will become the part of the institutional framework. They will be part of the ecosystem. They are part of the ecosystem, but they will be like institutions, core institutions of the ecosystem. Because once again, the survival. Who survive, they survive.
Yeah.
Can become even more stronger. Foundations are in place. Now we shall work on trust, I do believe, and then focus on making FinTechs institutions.
Good. Thanks. Over to you, Laksh. Are you seeing what Vugar is seeing in this part of the world too in Asia?
Yeah, first of all, I want to thank Vugar for all the partnership, the invitation to come to Baku, and all the collaboration that we did today. And it's really nice to see how well you are building up. As we went around Baku and we could see you, your brand being present, your customers being present, it was such a happy thing to be involved in this whole large ecosystem. So thank you so much for that. So I agree that fundamentally, I think the foundation is ready everywhere. The players who had to mature, the players had to get to a level of maturity. I think that has been achieved. Now, very similar to what Vugar is saying, how do we become bigger out of this? How do we become a more prominent part of the ecosystem? How do we drive financial services as a FinTech? And I think as we will move forward, like every bank is a tech firm now, every bank is a FinTech. Similarly, every FinTech will become a financial institution because of the maturity in regulatory aspects, compliance, processes, everything that comes in now. So I think every FinTech would be a financial institution as we've seen. So I absolutely agree with Vugar that 2026 is about FinTechs becoming financial institutions.
Nice. All right. So I'd like to move on to our second topic, which mainly focuses on what's finally working. And I'd like to ask Vugar, what do you see as the biggest structural tailwind for FinTech scale in 2026? Is it regulation? Is it consumer behavior or infrastructure, especially from an Azerbaijan perspective?
I will start from the Azerbaijan perspective. I would say it's a regulation first. The second, the customers' attitude. Customers, they were always there. They were waiting for a product to use those products. And boosting all those things, the boosters of those things, I do believe it's the regulation. So the tailwind is the regulation. And what we see and observe in Azerbaijan, earlier we discussed it during our conference, that the sandbox regime, how they are supported, or maybe the regulator puts the ways, removes the boundaries that we see in our pathway in order to follow up our journey, making the FinTechs, as Laksh mentioned, making institutions out of FinTechs. I do believe it's a regulation.
No. And we've heard about Unicapital speaking about how they would like to turn investment services into FinTech products. What did you productize first and why?
Accessibility, I would say, because it's our main target here is to remove the pain. And pain in the market it is access. How shall our products, how we have designed our products in a way that it will be accessible to the general public, accessible to our customers and users, end users. So we developed the investment as a service because we have to understand that there are some institutions, those are very strong in UX UI, they can deliver those products in a safe, better way to the customers. It includes remote KYC, it removes boundaries between institutions and clients and end users. So of course, if we will increase accessibility, we can build more strong business. We can outrun the industry.
Thanks a lot. That was very insightful. I'd like to move over to Laksh. What do you see is the most underrated tailwind in Asia that global CEOs often miss?
So, see, I actually answered a lot of what I had in mind, but you have to see, to understand the tailwinds, you have to understand where this industry started. So I think I have been involved in this since 2016 at the early side of it. It was more tech fin than fintech. And at that point, one lot of entrepreneurs believed technology was the sole answer. Two, what the regulators themselves were having a hard time understanding the systematic risks or how to minimize those because of this whole approach of the tech fin. And because that was happening, so the trust building between the institutional customers versus the B2B fintechs and the clients with the B2C fintechs, all of this was moving very slowly. This is 2016, I've been there. Now, if you come to 2026, so now the tailwinds that are happening is that the whole ecosystem has matured. First of all, the entrepreneurs understand the balance that needs to be between the financial aspect and the technology aspects, which is basically better processes, better compliance. That is one part of it. The second part is the regulators also understand now that how to manage systematic risks. Sandbox being one of the great examples that we were talking about. And the third part is that there has been an inherent trust building. This has been a decade of fintech, right? So there has been trust building slowly and it is gradually increasing. So all of these things together are working really well. And I think one tailwind that everyone misses is a accumulation of all these three waves coming together. But it's very hard to see the exponential impact of something like this. Because 10 years ago you launched an investment platform, the customers would be searching, is this platform legit? The regulators were placing artificial limits on you, you cannot go after this. But you were having hard time partnering with banks. Now, just see what Unicapital has done. You have two banking partners, you have customers coming in, and you have built your platform with so much maturity that you've done better than some of the banks that I have worked with. And I'm not saying because you're a customer and you're sitting here, but you've genuinely taken a very pragmatic approach, balance fin plus tech, regulation, and how do you scale from here. So I think the cumulative exponential effect of all of these is very hard to see, and that is what people always underestimate.
Thanks, Laksh. That was very in-depth. And it's interesting to see how all the pieces actually fit together, from regulation to fintech, and they all need to complement each other. So it's good to see how they need to work collaborative. I'd like to move on to our third topic, which focuses on challenges. And I'd like to ask Vogar, what is the first thing that breaks when you grow from 3 to 5x?
When you grow from 3 to 5, you can scale up technology, you can scale up human resources, you can scale up anything tangible, but you cannot scale the trust. And it becomes the cornerstone of everything. If you are moving too fast, you have to consider about the trust. It's not about trusting the money, it's about building solid, rigid, reliable systems that will last for decades, that will last and will continue lasting when business follows. It's about being a resilient service provider. And this is what I mean when I say trust, and this is a very important thing. When you start growing, you have to think about it, because when we started as Unicapital, we started from an idea that let's do investment as a service, let's build our own system. Yeah, we started, as Laksh mentioned, we have two partners who distribute our investment as a service services. We are continuously working with others. We are part of a central bank sandbox regime. We provide digital assets to our customers. The first investment company in Azerbaijan. By law, for your information, by law, digital assets are out of scope of investment services, but within the sandbox regime, we can do digital assets, which is also not regulated yet. So to be ready for everything, to building the core system, the core fundamental of this, that was that belief that, okay, what will happen when we'll start rapidly growing? What will happen when our customers like you, our partners like you, or customers like Yellow Bank or Leo Bank will come to us and say that we want to use your services. Are we ready for that or no? No, but the main thing was, do our systems are reliable, silent? Can we afford ourselves? Not just saying yes, we can do it, but we believe to what we say. That's the very important thing.
And what do you feel, or what do you think are the silent killers of FinTech, unit economics, when it comes to brokerages, wealth, in terms of fees, churn, fraud, cost to serve, etc.? Do you see any pain points when it comes to growing from that 3 to 5x on the fraud, cost to serve, and so on?
The major thing here is, I would say that in a philosophical thing here is to accept the weaknesses, accept what is wrong, accept what can be done better. Many things can be analyzed and you can rationalize everything, but accepting the big points and accepting and defending them, deferring them, making them unreliable, defeating them is the main thing here. And main thing that most of executives are not want to accept are hidden costs. This is the silent killers of the business. Hidden costs and cost of the service, hidden expenses and cost of the service. Even when you see that you are positive in revenue, when you will dive in and see, is it real revenue or not? What kind of hidden costs do you have? This type of things, I do believe that they are the silent killers of the business, and this is what executives shall accept and fight with.
No, I think that's great, because when we see a problem, we should automatically try to solve it and not swipe it under the rug and wait for some miraculous way of miracles don't happen. 100%. I totally agree. But that approach is very much the most way to solve any problem. I'd like to move on to Laksh. So you've been with ViewTrade, phenomenal growth over the last 3 years. What do you see as the biggest challenge that you did not see coming?
But that is actually a very interesting question. And first of all, the answer that you gave on trust, that scaling trust is harder than anything else. Very difficult answer to follow up on. But see, if you look at ViewTrade, we've grown about 3-4x in the last 3 years, and we are a bootstrap firm, 26-year-old. We have a big base to grow on, and we have done that. I think one of the things when you are looking at a trajectory like this is that processes have to keep scaling. It's very hard. Today you are operating as a 5-people unit. Now you are scaling, you are getting in more customers, etc. And making a bigger team. Now that process that worked for 5 people is no longer going to work for 8 people. And we've gone from, I was the first exec hire on ground, and now we have 100 people. So what it repeatedly does is, you have to scale the process and you have to scale yourself. And it is a very hard and overwhelming journey to do both at the same time. Because the person that I was on the first day of ViewTrade versus day 360 versus day 720 and today are three very different people, and they're thinking very differently, they're operating very differently. Similarly, the processes around that is that. So it is a very rewarding journey, but it is also a very overwhelming journey. So I did not see it. It's very hard to see it on day one that you will be at day. Sorry, I've not had enough coffee, but 3 years later, you will be sitting with 120 colleagues in the region. It's a hard thing to see, especially given our business. So I think that is very hard. Your personal scaling of the processes, that is very hard. And it was something that I personally did not foresee how hard it would be.
Thanks. That was definitely in depth. Now, if I were to say, I asked the question to Vugar, what do you see as the first thing that would break when you want to grow from 3 to 5x?
See, you have to there is a lot that can break. So look at running a firm, like any firm, like a FinTech firm. You have to look at it in the terms of points of failure. So the question, what I understand that question is, what are the different points of failures that you can foresee, and which are the ones which are more probable to happen? So, see, I think in a business like ours, partnering with the wrong kind of clients, not bringing in the right talent, once you have the right talent, not being able to enable them, the competitive landscape is such you could miss like a few things, etc. It is a very hard business to be in. Think of our business as a big machine, and there are all these nuts and bolts, and every nut can only go with one bolt, and you have to know where to put what, etc. And not doing one could lead to a failure, systematic failure, right? So that is the challenge of running a global investing business, a brokerage business. It is that people try to trivialize this, saying you just make an API call and execute and you get an Apple share. But what happens in the background is where the whole thing is. What happens when you send a share? Where do we take it? How do we execute it? How do we assure that your accounts are segregated? How do we assure all of these things are stability and stuff? So I think this whole business per se is so abstracted, even to the fintechs that we work with. There are so many points of failure, and you have to work on them repeatedly. You have to build processes, technology, so that those don't happen.
Yeah.
And then you just have order after order after order. We do 2.5 billion a day in cross-border flow. For that to go through, it's amazing how much effort and everything has gone into get to a point that without touching a single order, you can have that.
Yeah.
So that would be my mix-up and answer for what you were asking.
No, thanks a lot. I'd like to move on to a hot topic that everyone likes to discuss, which is focused on AI. And I'd like to move to Vugar. And I'd like to understand how you think of this in terms of what do you believe would be the best way to avoid an AI theater and force ROI discipline?
Thank you for touching this point. That's very interesting and very, as you mentioned, most everyone talks about it, especially in finance world of it. When we are talking about the AI theater, I mean, any AI solution, this is based on AI, can answer to definite questions, can resolve specific problems. Does it reduce costs? Does it save time? Is it trustable?
Yeah.
If none of those topics can be addressed by this new solution which is AI based during, I would say, next quarter, 3 months, you may disregard this AI solution because it will not serve the purpose and it will go to the favor. And to try to be, it will not be a reliable business. This is very briefly what I can answer.
Yeah. Thanks a lot. Yeah. If you had 10 options, let's say, and you had to cross a line into one of them where you'd say AI could not replace or displace. So basically, it could not be automated and a red line. Which one would you scratch out?
And we are talking about agentic AI when AI makes decisions, and making financial decisions is too much risky. It affects trust, of course, but I think more specific answer on that, more simple answer is that anything which is related to trust, ethics, and interpersonal relations, empathy cannot be automated, no way. And those are things, those are analog formats, you cannot digitalize them.
So basically the human touch?
Those things must be kept humanized. You cannot dehumanize them.
Laksh, over to you. And I guess I'd like to hear your thoughts on what you think. We can start with the last question. If you were to draw a line, in terms of what decisions will never be automated via AI, what would you choose?
See, Samir, it is more of a broader question than any fintech or financial question. So let me clarify what my personal view on AI is. I have said this on many panels and we've had this discussion a lot internally. We care deeply about this topic. We see AI as a cognitive enabler, or we see it as bringing in cognitive abundance. So rather than doing small things, you're taking so many small decisions. Rather than doing that, you can give a good prompt and get a good answer, and then you can see whether this meets your expectation or not. Since our worldview of AI is that it is an enabler, So what we do see this as is enabling our colleagues. And a very good example is the compliance bot we built to make sure we are in compliance with the SEC rules. It doesn't remove our chief compliance officer out of the picture.
Yeah.
Mark Ford, who's been very helpful in this. In fact, we call our bot Ford Junior. What it does is Ford Junior would go through, find the breaches, tell you why those breaches are there, and then fix those breaches. And then that document goes to Mark. And then Mark is obviously becoming more and more comfortable. But more than that, what it is also doing is, so this is our view of it. But you know what is the amazing part of this? So Mark is 30 years into compliance. This is what he done. Our marketing team, which is a year into the organization, can now manually also identify, oh, this might breach. You cannot say first, you can say one of the first, etc. So this whole process is also moving institutional knowledge from compliance and Mark, who's the smartest person in compliance in our organization, to marketing. So you have to look at AI as an enabler, and it is making everyone in the organization as smart as the smartest person.
Yep.
In this context of it.
So sharing the knowledge, basically.
Sharing the knowledge. So that part, I think, that is the view we subscribe to, or at least I subscribe to, and obviously then the teams that work with me have fallen in line with that worldview. So that is one. And what was the other question?
What's the best way to avoid an AI theater and force ROI discipline?
See, again, I think a lot of AI theater is with firms which are raising money, or their existence depends upon the AI theater. You know, I'm sure this will get cut out, or this will create a little ruffle. That most of AI theater is done by those firms who have to raise another round and tell their founders and their funders, etc. We are, I think, in Viewted, we are very lucky. Our founders built this firm, bootstrapped it over a large period of time, so we don't have any debt, we don't have any external founders. It is all completely employee. So we don't need to get into the theater to achieve anything, because these optics really don't matter in our case. Now coming to the second part, enforcing discipline of ROI. I think if you start from the customer experience and work backwards, or if you start from the outcome and work backwards, you will find a solution. Now that solution can be AI enabled, it can be Gen AI enabled, it can be ML enabled, it could be a simple Excel formula that you use. So you don't so you have to start from there and come back, rather than start from a solution and start finding a problem. That is, I think, where this whole discipline thing comes. It goes. That is where the discipline is not there. So I think our organization does really well. This is even before I started. You start with an outcome in mind and start working backwards on what will get it to you there. I think there is nothing wrong in a good working Excel sheet.
Yep.
In 2026. It is a great tool. So there is no shame in using those or macros, etc. Because they solve a problem. I mean, we have so many of them internally that will just do something simple without having to go through the huge AI and all of that stuff. So I think that the organization has that discipline already, and anyone who's listening, start with the outcome, work backwards.
Yep.
I think you'll be fine.
Yeah. No, thanks for that insight, Laksh. I'd like to move on to our last topic for today, which revolves around CXO wisdom. I'd like to ask Vugar a few questions, and I'll start with the first one. So, if you could share with us one decision that felt wrong at the time, but proved critical later.
Putting efforts building the foundation. Technical foundation, legal foundations, institutional foundations, all efforts that were put in foundation. When we saw that the businesses are growing very fast, the competitors' markets are growing, we decided to make everything, to build a strong foundation. And I'm totally do not regret that was the true, safe, and the wisest, and I think the most correct decision at that time.
Oh, yeah, thanks. That was. I definitely see that. I understand where you're coming from, because at the end of the day, when you're growing, you want to make sure that you're not on wood sticks, you're on proper concrete or something rock solid. And if I were to ask you, what is one thing that most FinTech CXOs get wrong?
Maybe analyzing the perspective of the business and seeing projections, analysis, making estimations. It's hard to say whether it's one thing or not one thing, but it's a complex of things that affects the fintech's future. And fintechs, those behavior are like the mindset of startups, and they are staying in the mindset of a startup for a very long time, a long period, not looking for cash flow, not looking for P&L, not going for forecasts, but just having the solid belief. You can keep your solid belief, but it shall be transferred into the real action. It shall be transferred to the foundations sooner or later. If you cannot see this transition, then I think it's the biggest mistake.
And if you were to start again today, what would you do different in the first 90 days?
UX UI very important. User experience is very important. User experience delivering to the end customer is very important thing. Would I redesign all those things? No, but I will do slightly redesign maybe. And for the next period, once again, I believe that it is about making solid foundation, building infrastructure. And in our case, in Azerbaijan case, because this fintech waves are new in Azerbaijan. We are newly starting those ecosystems. We are newly working with new talents from Azerbaijan. And in order to make a strong business, you need to have strong human resources. And it's very essential, very important. And emphasize, I will start from an idea, then I will see what is the regulation, how can I follow up regulation, because we are always communicating with central bank. All our actions, all our cooperations, all our deeds and plans, we try to communicate with central bank, because Unicapital is one of the biggest investment firms in Azerbaijan. We affect the industry, and that's why anything that we do on our side, it affects the user behavior, it affects the industry itself, and we accept the role of trust builders on the market. So in order to be aligned with the general policy, we try to maximize our communications to not have some corners, some places where some friction points. So see whether it is safe for our clients, whether it is safe for the company, is it good for the stakeholders.
Okay, and being part, or rather say in the heart of a financial institution / fintech, in your opinion, which fintech do you believe will not survive past 2030?
Those are built on fast money. Those are lack of. They are full of enthusiasm, but lack of maybe courage and lack of resources. And the hyperactive ones, those are spreading up ideas, spreading them all across, good ideas, of what I have to admire, but do not have enough, will, or it's not about being courageous, it's about having will, going and finish the idea, make a business, create an institution out of a startup, create an institution out of a fintech, make an idea to become a business, make an investment, transform investment to a positive P&L. This is thing that we need to follow up as good managers, good CEOs or good leaders. And if you see some lackages there, if you see some spam transactions, those are putting us away from this journey, and those are the stoppers. And those companies who do not follow this, I think that will be the failures.
Thank you, that was very in-depth. My last question to you for today is, what is one piece of advice you'd give to every fintech CEO that's watching this podcast?
Think, design, innovate, never look back, go ahead and build everything you do, build on trust.
Thank you, Vugar. I'd like to ask Laksh the same question, so I'll start off. What is one decision that felt wrong at the time but proved critical later?
I think one decision that was very hard, and I'm talking about this, is 2022, right? We collectively decided to not partner with fintechs who had a 0-0 business or who were doing this just to build a bigger community. It was a very hard decision, because now what you have done is you have walked out of a few dozen deals at least. I don't want to say 100 because I'm sure it was less than 100. And we walked out of those deals, and you have let your competitors walk through and take over those deals. It was a very difficult decision, but I think it brought in it was based on a lot of financial discipline. Because why are we into this deal? Just for a logo? That was such a hard decision. We took it collectively as an organization, and full marks to our management and leadership, Tony and James, who backed this decision. So that was a very hard decision. And as going went tough from 23, 22, 23, 24 onwards, a lot of those firms no longer exist. So a lot of the people who were catering to them were left with large unpaid bills, etc. And so we were validated much later. So before we were validated, we saw so many customers or prospects going to competitors and signing up with them. So it was a very hard decision, but I think it was the leadership team was very convinced this is not the right path. So I would rate that as one of the hardest things we had to do in the early scale up of our business.
And moving on to that, what is one thing you believe that most fintech CEOs get wrong?
See, unfortunately, we live in a time where people are not building to solve problems, they are building to raise the rounds. So, what will get you to fastest to the next round is a more discussed question than what will help us build this business sustainably for over 20, 30 years. And in this era of 21, 22, I think a lot of VCs were pushing fintechs to grow at all costs. So I think they obviously fell in that trap. And once you are in this, once you are doing performance marketing, you are giving out a free share, customers are coming in, it's very hard to stop. Because organic growth is really organic and slow. Going from getting thousands of customers a day to a few dozen, it's a very difficult transition. You feel like you're losing or you're deviating from the path, etc. So I think a lot of people spend way too much time and effort, and CXOs and CEOs, going after that growth, which was never going to be sustainable, rather than switching at the right time. It is a hard thing to do. I'm not criticizing it. I have a lot of respect for anybody who decides to go and be a founder. I'm not one right now. So I have a lot of respect. This is just my hindsight view of what went on for too long.
And now that you've gone through your journey, if you were to start today, what would you do different in your first 90 days?
I will give you a very controversial answer and you will love it. So I think the world fell in love with people who can think big. And everyone goes and says, oh, let's hire the big thinkers. If I can redo my first 90 days, I would hire more people who can think big but start small. I've scaled businesses for 17 years now. Over this period of time, it has become exhausting to only work or to work mostly with people who can just think big, because most of it never happens. So you need talent which can say, okay, I want to be the best investment platform that a customer has ever seen. But how do you translate it to a small action for your team today? So that you can build it up. So if it was up to me, I would deliberately go and hire more people who can do that. It's a hard skill to find, but you get the right people in that, your trajectory will look very different.
And after seeing what you've seen in the market, obviously you've attended many conferences here and there, what do you believe in terms of what fintech will not survive 2030?
It is a very interesting question. But you take some names. I'm joking. See, I think there are a lot of fintechs who are still solutions in search of a problem. And this is not only my view. This is also, I was sitting with the regulator in Malaysia, and the lady, very smart lady, and she said, we were talking about tokenization. And her point was, why? What are you solving for? And this is a regulator. So I think there are a lot of fintechs out there who are still solutions in search of a problem. And they cannot answer why easily. If you cannot answer why a customer should work with you, why a financial institution should work with you, or why you should exist in a single line, you will find it very hard to survive until 2030 or any number of. I think that why should be a very pointed, blunt answer. So
Yeah.
if you aren't there, you should find it very quickly or move on to something different.
And thanks, Laksh. And my last question would be, if you were to give one piece of advice to a FinTech CEO, what would it be?
I think there is no dearth of advice to CEOs. Yeah. But I can add some more. Listen, it is so easy to look at this person is from this X big brand, they have worked in Goldman Sachs, JP Morgan, this, and then they'll come and give you advice, and then you are second guessing yourself, etc. And it becomes hard, right? But I think the easiest way to screen out noise is get advice from builders, not people who are coming from just big brands. There's nothing wrong. It takes a lot to get into a JP Morgan, Goldman Sachs, but it is fundamentally a very different skill set. But when you are taking advice from a builder, that is the advice you need. And then I've done this mistake more often than most people would have, even thought of it. Like somebody big comes in, you listen to them and derail your whole plan because somebody from Google or this. So you have to fundamentally, I think you have to listen to more builders and less associators or brands and all of that stuff. So I think that would help you a lot in your journey. So that would be my advice as a builder. But it is a very hypocritical thing to ask in the way I've answered, but yeah, that would be my answer.
Thank you, Laksh. Thank you, Vugar, for today. Thank you, Laksh. It was a pleasure hosting you both.
Thank you.
And we appreciate your invitation here to Baku, Vugar. It was a pleasure coming to Azerbaijan. We had a great time. Thank you very much.
Thank you.